Bitcoin is consolidating near $90,000 after a post-Fed shakeout. Market commentary continues to frame BTC as range-bound and directionless around the low $90,000 area after this week's rate decision and subsequent risk-on risk-off crosscurrents. 6. 2. Strategy stays in the Nasdaq 100, keeping crypto treasury scrutiny in focus. Bitcoin holding company Strategy, formerly MicroStrategy, remains in the Nasdaq 100, extending its stay in the index and keeping attention on how passive fund flows and index provider rules can influence crypto-linked equities and sentiment around Bitcoin itself. 7. 3. Spot Bitcoin ETF flows remain a swing factor, net inflow on 12th December. US spot Bitcoin ETF flows have been choppy, but 12th December showed a small net inflow of about $49.1 million, driven primarily by EBIT, plus $51.1 million, while FBTC, minus $2.0 million, was slightly negative, based on Farside Investors' daily flow table. 4. Derivatives traders just navigated a major options expiry around max pain near $90,000. A large batch of Bitcoin options expired Friday, with multiple market notes highlighting max pain around $90,000 and thin year-end liquidity that can dampen follow-through moves, or, conversely, amplify sudden spikes if stops get hit. 5. Longer horizon risk narratives are back in the headlines. Quantum computing. A separate strand of coverage focuses on how quantum computing could eventually pressure cryptography standards used across digital assets, with reporting pointing to post-quantum mitigation efforts and the difficulty of coordinating major protocol changes in decentralized systems. The Fed cut rates, then complicated the easy money story. This week's macro backdrop remains central to Bitcoin's near-term direction because BTC has increasingly traded like a liquidity-sensitive risk asset during this cycle. Earlier in the week, Investing.com reported Bitcoin sliding as traders digested a Federal Reserve 25 basis point cut that still came with a cautious outlook.